Swayam Prabha. Digital India. Educated India.
Yoga Karmasu Kaushalam.
Friend, Namaskar. My name is Dr. S.C. Sardar, retired professor, SD School of Commerce, Gujarat University. At present, we are dealing with final accounts of sole proprietary concern. So far, we have observed 3 different parts. Now, we will deal with the preparation of final accounts part 1. Dear friends, in part 3, we have studied about items to be shown credit side in the profit and loss account, closing entries of profit and loss account, format of profit and loss account, illustration on preparation of trading and profit and loss account, difference between trading account and profit and loss account, what is balance sheet, purposes of balance sheet, features of balance sheet, presentation of assets and liabilities in order of liquidity and in order of permanency, classification of assets and liabilities, and format of balance sheet in order of liquidity in order of permanency. In continuation of final accounts of sole proprietary concern, we will see one illustration on balance sheet. Illustration number 3. Draw the balance sheet of Rajesh Kumar as at 31st March 2025 from the given information in order of permanence. We are having cash in hand rupees 11,200, sundry creditors rupees 28,800, bills payable 3,500, bills receivable 5,300, sundry debtors rupees 18,000. Machinery as on 1st April 2024 rupees 85,000 and depreciation provided for the year rupees 8,500. Furniture and fixtures as on 1st April 2024 means in the beginning of the year rupees 21,000 and depreciation provided for the year rupees 2,100. Closing stock we are having of rupees 15,400, proprietor's capital account rupees 90,000, he has drawn during the year rupees 8,000 and net profit as per the profit and loss account rupees 31,000. Now friends, we will see solution balance sheet of Rajesh Kumar. Capital we are having of rupees 90,000. In that we will add rupees 31,000. It means the capital of owner is of rupees 1,21,000. From that, during the year, whatever amount he has withdrawn to be deducted. So, at the end of the year, his capital is of rupees 1,13,000. Then we will talk about current liabilities. We are having sundry creditors of rupees 28,800, bills payable 3,500 and total is of rupees 1,45,300. Friends, we will see the items of asset side. Fixed assets, the first item we are having machinery and the depreciation on the machinery we have calculated of rupees 8,500. So, at the end of the year, the closing balance of machinery will be 76,500. In same manner, we will calculate depreciation on furniture also. The value of furniture is of 21,000. From that, depreciation will be deducted 2,100, the closing balance of 18,900 to be shown. Then we are having current assets. In current assets, stock having value of 15,400, bills receivable 5,300. Then we are having sundry debtors of 18,000, cash in hand 11,200 and total of the balance sheet is 1,45,300 rupees. During preparation of balance sheet, we have to identify items pertaining to liability side, which includes capital, profit earned during the year, drawings made by the owner, long term liabilities and current liabilities like creditors, bill payable, etc. And of asset side, which includes fixed assets in the form of machinery, furniture, investment, etc. Further, current assets like debtors, cash balance, bank balance, etc. the precise and current identification of items of liabilities and asset side will make your balance sheet true and fair. Friends, after having information for components of final accounts, now we will study some illustrations on preparation of final accounts without adjustments. Subsequently, we will see final accounts preparation with adjustment also. Final accounts are prepared from the given trial balance. Trial balance has two sides, debit and credit side. Items of debit side would appear either debit side of trading account or debit side of profit and loss account or asset side of balance sheet, while items of credit side of trial balance would appear either credit side of trading account or credit side of profit and loss account or liability side of balance sheet. Friends, note over here, all direct costs would appear debit side of trading account, all indirect costs would appear debit side of P&L account, and assets would appear in balance sheet asset side. All direct income would appear credit side of trading account, all indirect incomes would appear credit side of profit and loss account, and liabilities would appear in balance sheet liability side. Now, let us have a look on illustration number 4, that is pertaining to preparation of final account. From the following trial balance, prepare trading and profit and loss account for the year ended 31st March 2025 and balance it as at that date. Friends, let us have a look on the items of debit side and subsequently we will see items of credit side. We are having debit side first item, sundry debtors of rupees 15,000, opening stock that is on 1st April 2024 50,000, land and building 1 lakh, cash in hand 16,000, cash at bank 40,000, wages 30,000, receivables 20,000, interest 2,000, bad debts 5,000, repairs 3,000, furniture and fixtures 15,000, depreciation 10,000, rent 8,000, salaries 20,000, drawings 20,000, purchases 1 lakh, office expenses 25,000, plant and machinery 57,000. Total of trial balance of debit side is 5,36,000. Now, we will have a look at the credit balances. First item is given to us capital of rupees 2,50,000, interest 6,000, sundry creditors 70,000, sales 1,70,000, bills payable 40,000 and total is 5,36,000. Now, we are having value of closing stock that is on 31st March 2025 rupees 1 lakh. Let us have a look on the solution of our question. Let us understand solution process to arrive at correct answer. First of all, we should deal with the adjustment. In this illustration, we don't have adjustment. In second stage, we will study items of debit side and we will recognize their place in final accounts. In third stage, we will study items of credit side and we will recognize their place in final accounts. Finally, we will close trading account and will be transferred to profit and loss account. In next stage, profit and loss account will be closed and will be transferred to capital in the balance sheet. On completion of this process, we will close balance sheet. If total of balance sheet of both the side is equal, it means your answer is correct if no other mistake is made during process. Now, friends, let us see the recognition of different accounts of debit side. As explained, these debit balances of trial balance would appear either debit side of trading account or debit side of P&L account or asset side of balance sheet. The first item of debit side of trial balance is sundry debtors, and sundry debtors are of rupees 15,000. It is current assets and would appear in balance sheet at asset side. Second item is opening stock of rupees 50,000 and this opening stock always appears debit side of trading account. It is a part of direct cost. Then land and building of rupees 1 lakh, it is a fixed asset and would appear in balance sheet asset side. Cash in hand 16,000, it is current asset and would appear in balance sheet asset side. Cash at bank 40,000, it is current assets, would appear in balance sheet asset side. Wages 30,000, it is a direct expense, would appear debit side of trading account. Bills receivable 20,000, it is current assets and would appear in balance sheet asset side. Interest 2,000, it is an indirect expense and would appear expense side means debit side of profit and loss account. Bad debts rupees 5,000, it is indirect expense, would appear expense side, that is debit side of profit and loss account. Then we are having repairs of rupees 3,000, it is also indirect expense and would appear expense side means debit side of profit and loss account. Then next item is of debit side furniture and fixtures 15,000, it is a fixed assets and would appear in balance sheet asset side. Now friends, next item of debit side of trial balance is depreciation. We have depreciation of rupees 10,000. It is indirect expense and non-cash expense would appear expense side means debit side of profit and loss account. Next we have paid rent of rupees 8,000. It is indirect expense would appear expense side means debit side of profit and loss account. Then we are having salaries of rupees 20,000. It is indirect expense would appear expense side means debit side of profit and loss account. Drawings, yes, this is very important, rupees 20,000. It is the reduction in capital and will be deducted from capital. Accounting effect will be given in balance sheet at liability side. Then purchase is 1 lakh rupees. It is direct expense would appear debit side of trading account. Then we are having office expenses, very obvious, it is item of profit and loss account rupees 25,000. If it is item of profit and loss account, then it is your indirect expense would appear expense side debit side of profit and loss account. Plant and machinery, yes, it is a asset 57,000 rupees, it is a fixed assets and would appear in balance sheet asset side. Now friends, after having recognition of accounts of debit side, let us see the items of credit side. Credit balances of trial balance would appear either credit side of trading account or credit side of profit and loss account or liability side of balance sheet. The first item which is given to us in the trial balance at the credit side is capital rupees 2,50,000. It is capital and would appear in balance sheet liability side. Then we are having interest, it is a income. It is an indirect income rupees 6,000 and would appear credit side of profit and loss account. Sundry creditors, it is our liability, it is our current liability and would appear liability side of balance sheet. Sales, that is our direct income and would appear credit side of trading account. Bills payable 40,000, it is also part of current liability and would appear liability side of balance sheet. Friends, note over here, that is about closing stock. Closing stock value is ascertained from stock register and its value will be shown in trading account credit side and second effect in balance sheet at asset side on the basis of given journal entry. Journal entry will be like this: closing stock account debit by rupees 1 lakh and trading account will be credited by rupees 1 lakh. It is to be remembered that according to conservatism concept, market value or cost price of stock, whichever is less, is to be recorded. Here no information is given about cost and market value, thus it indicates that cost and market value are same. Now friends, we will start to prepare our final accounts. As you know, the first component of final account is trading account. So we will deal with the items of debit side of trading account. We have opening stock of rupees 50,000. We have purchases of rupees 1 lakh. We have wages of rupees 30,000. Now friends, see the result, we are having gross profit. It means the total of credit side we will have more than the total of debit side and that is why gross profit is disclosed over here rupees 90,000. Let us have a look at the items of credit side. The first item is sales rupees 1,70,000, closing stock rupees 1 lakh, total 270, difference is appeared debit side 90,000 to be transferred to profit and loss account credit side. So, at the credit side of profit and loss account, we will transfer this 90,000 rupees. Friends, second component of final account is profit and loss account. So, the gross profit we will transfer to our profit and loss account credit side. Credit side gross profit will disclose of rupees 90,000 and we are having interest income of rupees 6,000. No other item is given for the credit side of profit and loss account. So, we will have a look at the debit side of profit and loss account. First item in the form of expense is interest rupees 2,000, bad debts rupees 5,000, repairs rupees 3,000, depreciation 10,000, rent 8,000, salaries 20,000, office expenses 25,000 and finally, we have net profit rupees 23,000 to be transferred to capital accounts. So, total of profit and loss account is equal 96,000. Now, we will see balance sheet in order of liquidity. We will deal with the liability side. The first item we will see, that is current liabilities, and current liabilities are most liquid liability. The first item of current liabilities is sundry creditors of rupees 70,000, bills payable 40,000. So, total current liabilities are of rupees 1,10,000. Then after, we do not have long term liability, so we have not disclosed it. Then we will have our capital. Opening balance is of rupees 2,50,000. From that, whatever amount we have withdrawn during the year 20,000, then total we will have of rupees 2,30,000. From that, after deduction of drawings, we will add our net profit of rupees 23,000. Finally, the closing capital of the owner will be of rupees 2,53,000. Now, let us see items of asset side. The first, we will deal with the current assets. Cash is the most liquid asset, and that is why it is disclosed first, and that is 16,000. Then we will see all assets in order. Cash at bank 40,000, bills receivable 20,000, sundry debtors rupees 15,000, closing stock 1 lakh. So, all current assets are of rupees 1,91,000. In order of liquidity, after having current assets, we will disclose fixed assets. Fixed assets having furniture and fixtures of rupees 15,000, plant and machinery 57,000, land and building 1 lakh. So, total is of 1,72,000. So, final total of balance sheet is 3,63,000. Let us understand the liquidity order. Cash is the highest liquid asset as compared to given assets. Land and building is least liquid asset. All assets would appear according to their cash conversion time. There is a continuous increase in cash conversion time, thus their liquidity position is reducing. Same is with the liability side. Sundry creditors and bills payable have higher liquidity because these are to be paid in very short time. Now, we will see balance sheet in order of permanency. Now, we will deal with the liability side. The first item is our capital. We are having opening capital of rupees 2,50,000. We will deduct our drawings 20,000. So, net amount is rupees 2,30,000. We will add our net profits 23,000. Finally, the closing capital of the owner will be of rupees 2,53,000. Then we do not have any long term liability. We have not disclosed it. We are having current liabilities, sundry creditors 70,000, bills payable 40,000. Total of current liability comes to 1,10,000. Then after, we will deal with the items of fixed assets. Land and building 1 lakh, plant and machinery 57,000, furniture and fixtures 15,000. So, total of fixed assets is 1,72,000. Now, we will have a look on current assets. The first item in current assets is closing stock 1 lakh rupees, bills receivable 20,000, debtors 15,000, bank balance 40,000, cash on hand 16,000. Total comes to 1,91,000 of current assets, and total of balance sheet of both the sides 3,63,000. Let us understand permanency order. Land and building has very high status of permanency and subsequently other assets. Cash has the lowest permanency, the cash has highest turnover ratio. All assets would appear according to their lifetime. There is a continuous decrease in quality of permanence. Same is with the liability side. Capital has higher permanency, that is till the life of the business, and sundry creditors and bills receivable have lower permanency. Now, friends, let us recollect the discussion of this part. In this part, we have studied one illustration on preparation of balance sheet. Secondly, we have studied one complete illustration on preparation of final accounts, where we have prepared trading account, profit and loss account and balance sheet. All revenue incomes and expenses accounts are closed and transferred them to trading account and P&L account according to nature of accounts through closing entries. Then closing stock value is ascertained from stock registered and valued either at cost price or market value, whichever is less as per concept of conservatism. Before preparation of final accounts, we have recognized all accounts of debit and credit side of trial balance, and their place in the final account is determined. Gross profit and gross loss are transferred from trading account to profit and loss account as the case may be. Net profit and net loss are transferred from P&L account to capital as the case may be. Balance sheet can be prepared in two ways. Number one is in order of liquidity and number two is in order of permanency. Liquidity order focuses on cash conversion speed of respective asset. Permanence order focuses on time period of a respective asset. In next part of final accounts, we will meet with some other important issues. Revision is desirable to acquire good understanding. Keep on revising and wait for the next part. Thank you.